Welcome to the DeFi podcast, where we attempt to imagine the future of crypto, because foresight is what makes great investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment. All statements made by hosts or guests are strictly beliefs or point of views and are not recommendations to buy, sell, or hold any security. Hosts or guests may hold certain securities discussed in this podcast.
Hello and welcome to the DeFi podcast. Today we have Rhett Ship back on the show. Rhett has a background in machine learning, decentralized finance, and he's a senior DeFi specialist at Wave Financial, which is a leading crypto asset management firm. And today we're going to delve into the topic of Ethereum censorship and everything around it. Welcome to the show, Rhett.
Welcome, Rhett.
Thank you. Glad to be here.
So this is definitely a big topic, but we kind of want to cover just the baseline so that, I think myself, probably JF, and a lot of people out there kind of need to have a better understanding of what makes up the different pieces that is bringing the topic of Ethereum censorship to the forefront, right? Because it's not really one thing, right? What would you say are at least right now, the main things that are just making up quote unquote Ethereum censorship?
Yeah, so the quick backstory is OFAC cracked down on Tornado Cash, which is a mixer. It basically helps you to privatize your assets. Flashbots and other MEV-related services, some of them, Flashbots mostly, are excluding Tornado Cash payments. They are creating the blocks that validators end up proposing, and Flashbots is excluding those transactions. And so de facto, a bunch of Tornado Cash transactions end up getting excluded from the majority of the blocks.
Can you quickly just define what Flashbots are?
Yeah, so let's take a step back. In a blockchain, at each block, one of the validators gets to decide what goes into that next block. They get to propose that block, and they say, okay, here's a bundle of transactions, and here's the order they'll be in, and here's the next block. Every few seconds that happens, and then all of the other validators attest to that block, and they say, yes, this is valid. There's no double spends in here, etc. So that's the basics of how a blockchain works. You have one block proposer, each block, and then everyone else attests to it to verify that it's valid. And that proposer has a lot of freedom in what they include. They can throw in whatever transactions they want out of the mempool. The mempool is a pool of transactions that are waiting to be included. They can throw in some of their own transactions. They can say, oh, I'll grab these out of the mempool. I'll throw in a few of my own. And here's this block, and then everyone else attests to it. Because I have a lot of freedom when I'm proposing a block, I can say, well, I'll grab these transactions out of the mempool, but there's these other ones that are related to Tornado. I'm going to leave those out, and then I'll propose this, and it's still a valid block. And so the attesters, the other validators that attest to the block, will say, yeah, it's valid, and you move on with your life. And because it's happening at that block proposer level, the censorship is really, it results in a delay. If I do a tornado transaction and 50% of the proposers are going to not include me, then it'll take me 50% longer, all else held equal, to get into a block. But then once I'm in the block, everyone attests to me and says, yeah, that's a valid transaction. You're good to go. At a high level, censorship at the proposer level, unless you have 100% participation, results in delays, not true censorship. Whereas if it happened at the attester level, where validators would say, this is not valid because it came from Tornado Cash, that would result in true censorship. So most people in the Ethereum community think that attester level censorship like that should result in slashing and should not be allowed. And then there's a debate as to whether or not proposers should be allowed the freedom to exclude sanctioned transactions or not. Some say proposers shouldn't be allowed to do it either. Others say proposers should be allowed to throw anything into a block that's valid. They should have full freedom. There's kind of a debate there.
Currently, the censorship is happening at the proposer level or at the validator level?
Yep. Proposer. No, there's no attester level censorship.
Okay, and what are the mechanics that make this possible at this level and not this other level?
Well, yeah. So to give a little bit of background, even why the censorship is happening, most of it's not happening because validators want to censor. It's because validators want to be profitable. So what happens is, so there's this concept of MEV, maximum extractable value, which is that when proposing a block, if I am careful about how I order the transactions in the block, I may be able to extract some value myself. And so I, as the block proposer, if I order the transactions a certain way, I make more money when I propose that block. But what has ended up happening, which is a good thing, is the validators themselves have kind of outsourced that job. So they say to Flashbots and BlocksRoute, et cetera, hey, you go find a way to order the transactions that'll be profitable. You serve that up to me and say, hey, I want to pay you X amount of money to be able to propose this block, to decide how your block that you propose gets ordered. And then you end up having this situation where most of the MEV still goes to the validator, but this third party can share in that by finding like the MEV. Well, what happens is a lot of the validators will say, okay, we are going to accept blocks from these kind of MEV services like Flashbots and BlocksRoute, et cetera. And a lot of them will say, hey, we'll take whatever the highest bidder is. If the highest bidder is BlocksRoute, we'll take that. If the highest bidder is Flashbots, we'll take that. Well, it turns out, or Eden, it turns out that right now, Flashbots is one of the few that's censoring, but it happens to win those. It happens to bid the most in almost every case because they're a little bit better at MEV right now. And so the validators themselves are like, I don't care if a block has censorship or not, and maybe I default prefer it doesn't. But if Flashbots is offering me more than BlocksRoute is, I'll take that one.
And the fact that Flashbot is able to extract more value, does that have any relation to the fact that they're picking that they're being OFAC compliant, or it's just randomly the way that it played out?
Theoretically, they're giving up a little bit of yield by excluding transactions, but it's not much. There's not a lot of that kind of there's not a lot of high value activity coming out of those OFAC transactions. It's more that they were the first to start doing this, and they are a lot more mature, and they're just, Flashbots has been around quite a bit longer than their competitors, and it's kind of a maturity thing.
So what are the kind of real world effects of this happening? Are there upsides? Are there downsides? Like what sort of, how is the end user going to feel something like this going on the backside?
So the whole thing with like Flashbots and BlocksRoute, et cetera, engaging with validators in this way, on the whole, is a good thing. That MEV at a high level, you want MEV to be as small as possible. The most you can extract is low, and then what you can extract is democratized. And the Flashbots, BlocksRoute, Eden thing helps democratize that MEV a little bit, because the three of us could participate in that MEV by proposing, like, interacting with validators to participate in that MEV. So that's a good thing. Now, the censorship is not a good thing. Since it's happening at the proposer level, like I said, unless you have 100% participation, what it results in is delays. If 50% of all blocks are OFAC compliant, then OFAC non-compliant transactions will take roughly twice as long. If 99% are OFAC compliant, then it'll take much longer. So it results in delays for those who are trying to do non-OFAC compliant transactions, because you have to wait around longer for a block to get proposed by someone who is not censoring. So it's not a good thing. It's not what I would call like true censorship. It's delays, but it still is problematic.
What are the incentives or reasons for Flashbot to be pushing this OFAC compliance?
They are based in the U.S., and I think they're just nervous about their own risks as far as, if you don't comply with OFAC, the penalties are very, very harsh. And so I think they probably don't want to be doing it, but they feel like they're at risk because they're US based. And they themselves are doing some things to try to mitigate this, I think, in the sense that they are starting to open source a lot of their stuff. And so, the idea is that, we open source our code, other people build up competitors that, take advantage of what we've built, but are maybe domiciled elsewhere and aren't as concerned about this issue.
And what are the alternatives to Flashbot, and how strong are these competitors? Are they exposed to OFAC as well?
So there's several. Blocks Route is one of them. Eden is one of them. There's one called Relayor that's newer. They're pretty good quality. They're a lot younger, less mature. The amount of money that you get from accepting a block from one of those tends to be a little bit lower. Blocks Route actually has multiple different ones. So you can do Blocks Route Max Profit, Blocks Route. There's one that's more ethical. I can't remember what the name for it is, but they have multiple different ones. And so if you say, hey, I only want to accept transactions that don't engage in these types of extractive MEV, then you only plug into their more ethical version, and then you maybe give up some profit, but maybe you feel like you're a better steward of the Ethereum blockchain.
And let's say your transaction is getting, quote unquote censored, and you have to wait, let's say we theoretically hit like a 90% mark. Does this increase costs at all, or is it still you're going to pay like baseline cost?
Increase cost to the user, or
as far as like gas fees goes.
Well, so what you could do is make it a little bit more attractive to include you. If you're doing a non-OFAC compliant transaction, you could say, I'm going to dial up the amount of gas that I'm paying, so it makes it more attractive for the proposer to include me. And so then it subtly penalizes those who exclude you.
Right.
But if you just paid, the normal gas or whatever, then you're just mostly going to be waiting around a little bit longer.
Does MEV give validators the opportunity to add in, for example, their own transactions and increase their MEV?
Exactly. So that's a lot of how MEV works. So say I see that you have a transaction waiting in the mempool that does a $5 million swap USDC for ETH on Uniswap. And the swap is large enough that it moved the price of the two assets relative to each other. I could say, I see that waiting. I'm going to insert my same transaction first, doing that on Uniswap. Then I will do yours, and then I will unwind mine on the other side. And I basically front ran you.
Right. So you kind of have an incentive to increase slippage on like an AMM.
Exactly. So yeah, you saw it as increased slippage. I saw it as profit. And that is one form of MEV. And that form of MEV is relatively extractive. By the way, at the base layer, at the Ethereum protocol level, there are multiple coming upgrades that drastically reduce the amount of MEV that can be engaged in by proposers. And at a very high level, the ideal scenario for MEV is to reduce as much as possible, how much of it is even possible, and then what's left over you want to democratize. I think theoretically you can't reduce it to zero, probably. But you can reduce it a lot, and then, like I said, democratize what's left over.
Right. I think probably most people would agree. Maybe not the people doing, validation, but I get the idea that most people would think that, validators remaining impartial is probably a pretty important thing to have.
Yep, definitely. Some forms of MEV are kind of extractive to the system. Some I would consider neutral. Some are more positive, where you're helping the system become more efficient. Like, for instance, some big transaction happening on Uniswap, maybe you are doing some transactions to balance out the price of ETH relative to USDC across the dexes, and that's kind of a You're increasing the efficiency of the system by doing that. But the types of extractive MEV, you want to reduce that as much as possible.
So can you give me an idea of what privacy is kind of looking like right now on Ethereum? I feel like most people who are kind of unfamiliar with crypto, they get this long, private key and public address, and I think most people would probably assume that they're semi-anonymous, right? But as far as I'm aware, I think it looks like transparency is pretty low, and I think it's actually pretty easy to just, for example, if you're like an authority or you're just some kind of, tracking entity, you can probably find out people's information pretty easily. So there's that, and then also, what options do users currently have to actually remain private on the chain?
Yeah, good question. So most blockchains, almost all of them are transparent. You can just go explore Bitcoin, Ethereum, Avalanche, Solana, etc. So the blockchains themselves are transparent. So if you want to introduce a level of privacy, you have to, add some things. So one way to do that is at an application level, you can introduce what's called a mixer. That's what Tornado Cash is, where basically people deposit in their ETH, and then it kind of all gets into the same pool, and then you withdraw to a different address. And the idea is that it's somewhat hard to know, to link up the depositing address and the withdrawing address. These mixing services are, if you have a motivated tracker, like say the US government wants to track you, mixing service actually doesn't help you all that much. It's not that hard to track someone through a mixer. And actually, like Laura Shin recently identified who the Ethereum DAO hacker was in that very early exploit, like many years ago, by using basically a tool to unmix a mixer. Another way to add privacy is at a layer 2, you can use a zero knowledge rollup in order to also not just increase scale, but also introduce privacy. Aztec is live and does that. I think that's probably a little bit more effective of a way to privatize transactions, but I don't know theoretically just how hard it is to trace transactions in Aztec. And then the third is just to use a blockchain or token that is built for privacy from day one. And the examples of that are Monero and Zcash. My understanding is that Zcash is probably best in class as far as privacy is concerned. And the way to take advantage of both theoretically would be maybe when you want to privatize your, add some level of privacy to your wallet, you maybe bridge out of ETH into Zcash, and then you bridge back in from Zcash into another wallet. Of all of these solutions, mixers are the least effective at giving you true privacy, which is why I find it kind of interesting that OFAC went after Tornado Cash, where I would think if I were them, I would say, well, let's let that keep running and let people have the illusion of privacy when we can track them through there just fine. Whereas when you come in and you sanction that, and then people who want privacy instead go to Zcash or Monero, or they go to a privacy preserving ZK rollup, you as the US government is going to have a harder time tracing them than you would if they were all using Tornado.
Do you know when this whole concept of being able to censor transactions on Ethereum actually first created?
I don't know the entire history, but regulatory compliant blocks have been produced in Ethereum and even Bitcoin going back multiple years. It hasn't been a major thing. There's been very little of it for a long time. At first, it became a real issue, like a noticeable issue, post the Tornado Cash OFAC sanctions, which were very recent. Before that, there was a much smaller number of sanctioned addresses, and you had some very small amount of participation of some miner here or there producing compliant blocks. But it became a real issue, like an issue worth paying attention to post the Tornado Cash stuff, which was in the last year.
So I think previously it seemed like all of the main censorship that was happening was mostly related to big hacks, the Mt. Gox hack, the Bitfinex hack, all of these like big large hacks, and I'm pretty sure it seemed like all the centralized entities, like centralized exchanges, were targeting certain addresses associated with these big hacks, and then just sort of blacklisting them, or like if they would come in, they would just get locked out and not be able to make any further transactions.
Yeah, so that's censorship at a different level. So it's not censorship of the blockchain itself. It's just, hey, I'm an on and off ramp, and I'm not going to let you on or off ramp through me if you are on this list of wallet addresses.
Yeah, so that was censorship at like the centralized level. Now we're kind of starting to see the emergence of censorship at the decentralized level. And so when did this become sort of like a realistic thing that we could achieve?
It could be done theoretically from day one, right? At any moment in time, whoever's proposing a block has the power to decide what's included in the block or not. And if the government said, "Hey, we prefer you don't include transactions from this address," anyone could choose not to include. Like I said, that type of censorship, it could have been done from day one of any of these blockchains, and still can be done by any of these blockchains at any moment, but it results in delays only. Whereas attestation level censorship would result in true censorship. None of that is being done. That could be done as well. Most blockchains, blockchains that are proof of stake and allow for slashing, like Ethereum does, has a much easier way to recover from that, where you can say, hey, if you don't attest to the validity of a valid block, you're going to get your stake slashed and you won't be able to participate in the network anymore. Then you recover from that pretty easily. None of that's been happening. It could happen where I could say, I, as an Ethereum validator, will not attest to blocks that are to the validity of blocks that have sanctioned transactions in it. But the recovery is pretty easy. You could theoretically also slash proposers that censor. That's obviously not happening right now, and there's some debate as to whether or not it should happen. But you could say, hey, if you're a validator, you are required to include, you're required to not exclude sanctioned transactions. If we see that you're doing it, we're slashing you. There are some real theoretical challenges with doing that at the proposer level. And then there's also philosophical questions of how much freedom should a proposer have? Should they be able to propose anything that's valid, or should they be restricted? And there's people on both sides, and then there's also some in the middle.
And you briefly touched on how achievable it is on proof of stake, but can you just sort of cover the difference between how hard or easy it might be to censor on proof of stake versus proof of work?
At a high level, it's essentially the same. The only major difference is that slashing would allow you to force exit someone who's participating. So proof of stake is a little bit better in that regard. Proof of work and proof of stake, ignoring the slashing piece, have the same amount of risk for this. So Bitcoin in its current state versus if Bitcoin switched to proof of stake would essentially be the same, unless you introduced a slashing condition that said if you produce, censorship, censored blocks, then you get slashed, then proof of stake becomes a little bit better. But this has been framed by some that, Ethereum, when they switched to proof of stake, this became a problem. That's false. The switch to proof of stake made this no worse. Proof of work, the risk, the attack surface was just as large, arguably a little bit larger.
But the difference being that there's no DeFi protocols like Tornado Cash, or OFAC is not targeting anything specific to Bitcoin, and that's why this hasn't happened on Bitcoin. Is that essentially?
There have been OFAC compliant Bitcoin blocks produced, but because there's no applications on Bitcoin, there's just less to censor. There's still some, but there's less to censor. And then there's also a cultural component where when some OFAC compliant Bitcoin blocks got proposed, some people got upset about it, and then those entities stopped doing it. So there's an important cultural component here too, and you're seeing it in the Ethereum community, where a lot of people are upset that some validators are doing this, and so there's some level of social pressure to stop doing it. And I have personal friends that are running ETH validators who have said, I'm not going to accept anything from Flashbots. I'm only going to plug into those that don't censor. Some aren't plugging into any of the MEV services at all. So there is that cultural component as well.
And what are the odds of like slashing becoming sort of an idea that is implemented?
I think it's pretty unlikely that they'll introduce slashing at the proposer level. At the attester level, yeah, that's likely that that would happen. At the proposer level, there are two proposals that will make it much harder to censor. The first and easier one is called CR lists. And the idea here is that you just make it expensive for someone to censor. The idea is that if you are going to exclude some transactions that are in the mempool, you have to fill up the space that they would have taken yourself. And given how Ethereum blocks work, that could become very costly, and the costs increase along a curve because of EIP 1559. And so the idea behind CR lists is, hey, a person still can censor, but they're going to have to pay for it. And that could be very costly to them. So you punish censorship. That's the first. The second, which makes it very hard, near impossible to censor at the proposer level, is what you hear, they'll call it PBS, proposer builder separation, with an encrypted mempool. And so the entity that proposes a block and the entity that builds the block that's going to be proposed, they're separated. And the mempool you're pulling transactions out of to put into the block is encrypted. So the person who's building that block doesn't even know this one's OFAC compliant address, this one's not, et cetera. You only know some basic things. And if you have proposer builder separation with an encrypted mempool, it's basically impossible to censor like tornado using addresses. You don't even know what they are until the block's already proposed.
Is this coming?
That's a little bit more challenging, but it's on the roadmap. So CR lists as a first step makes it really expensive to censor. PBS with an encrypted mempool makes it basically impossible. You implement that at that base level. You don't need to worry about introducing slashing conditions for block proposers, which there are many hard to solve challenges if you wanted to slash at that level anyway. So a lot of people think, well, maybe you shouldn't do it philosophically. Even if you wanted to do it, it would be hard to know if someone left out a tornado transaction because it was a tornado transaction, or because, hey, I just wanted to throw these other transactions in there instead. So those are the solutions that most people think long-term are the better solutions, PBS and CR lists.
And what is the realistic timeline for these solutions to be implemented?
Good question. I've seen some debate there. The PBS solution, which is the bigger, there's some challenges there, and it's not super well developed yet. My guess is that that's a few years out. I don't know enough to say just how big of a challenge it is. It's obviously, I think, a smaller challenge than like switching from proof of work to proof of stake, but it's not like a super simple upgrade. My guess is that takes a little bit of time to get right. CR lists are much easier, and they're a great stopgap. So you implement CR lists, you could do that very soon because it's just so much simpler. That gets you, maybe 80% of the way there by penalizing those who censor, and then PBS maybe you get in a few years. That's high level guessing, by the way. I'm not technical enough to say this is just how big of a challenge PBS is and how hard it's going to be to get in. And then there's a priority question too. So in the Ethereum roadmap, there's this question of, well, do we prioritize PBS over dank sharding? And there's some debate there. And you could speed it up if you prioritize it higher, et cetera.
Would you say that there's been a lot of talk in the crypto community about these issues? What is your perspective on the health of the Ethereum network from a censorship point of view currently? Are we in good shape, or are you worried?
I'm somewhere in between. So there's on the one extreme end, you'll see this from a lot of Bitcoin maximalists, the claim that like, oh, Ethereum's already captured and it's dead, it's done. And then on the other side, you'll see some people say this is a nothing burger because it's like, well, it doesn't result in censorship, it's only delays. We have these things on the roadmap, et cetera. I put it somewhere in between where I say, hey, this is a real challenge to pay attention to. It's not fatal, it's fixable. We have a number of the fixes in place. And we as a community should also work to do social things to make it better, faster too. So in addition to CRless and PBS, we should just as a community be not engaging in that. So, and we should be just socially like, hey, if I have some ETH, I should spin up a validator and refuse to accept OFAC compliant blocks from Flashbots. And so I think that's a really valuable thing. I think making it so that it can't be done at the base layer is important. That's coming. So I think it's an important issue. It's solvable. It's not fatal, but it's worth calling attention to. And as a community, rejecting these attempts at censorship.
Do you think it's kind of concerning that, for example, validators seem so willing to just immediately adapt to something like OFAC compliance? Is that like kind of like a warning sign for the future?
I consider it mildly concerning. So most of it comes from validators being profit maximalists, not censorship in favor of censorship. It's just, okay, the most profitable blocks are coming from Flashbots and they censor. Okay. But like socially, I think it's better if the validators say, hey, we are against this and are willing to give up some profit. So don't be evil is great. Can't be evil is better, which is where PBS comes into place or comes into play. So I think I consider it mildly concerning, but yeah, it's mostly just validators outsourcing MEV and then being willing to take whoever the highest bidder is. So it's more from the validator perspective, it's more coming from, I'm just going to be a profit maximalist.
Right. There's been a little bit of a misconception. Some people seem to think that OFAC compliance kind of equates to like a 51% attack or something similar, right? But that's obviously not the case.
Exactly. You could consider it a type of 51% attack if it was happening at the attestation level, where if I had 51% of the network and I said, I'm going to say these blocks are invalid if they have tornado transactions, then that's more of what I would consider a 51% attack, and that would be highly concerning and I think should be slashable. But at the proposer level, no. And honestly, on all the blockchains, Ethereum included, Bitcoin included, et cetera, it's always been a thing where whoever's proposing the given block at a given time has basically full freedom to propose anything that's valid. And so you could propose an empty block. And that has happened. You'll see a lot of empty Bitcoin blocks, for instance, get proposed. And that's been a thing that is considered fair game, is part of the system. It's not what you would call a 51% attack. It's not ideal though, right? So Bitcoin as a network is less effective if you have any empty blocks because there are transactions that were waiting at that time that didn't get through. So it's not an ideal thing.
No, especially considering the block time.
Yeah. Yep.
What would happen if we see sort of increased levels of sort of government overreach or pressure on the individual validators? For example, OFAC wanted to try and say, okay, well, if you accept these changes, then we're going to sanction you as a validator, right?
So that would result in something very similar to what happened with Chinese Bitcoin miners, where if the US did that, it would harm the US's place in crypto more than it would harm Ethereum. What would likely happen, I think, is many of the US-based validators, those who are risk averse, would just move out of the US and run their validators from some other more friendly place. And then validators who are maybe risk seeking would just run it behind a VPN from home. One thing to note is it is harder for a regulator to chase down a staking validator than a mining operation. Mining operations produce a lot of heat. They can just go look and see, hey, where's a lot of heat being produced? And you can find some mining operation that was hiding. Whereas a validator, you can run it on a very low power laptop. And so it's more of a challenge, not impossible, but more of a challenge. So I think that's what would likely happen is a lot of validators just move out of the US and do it elsewhere. You wouldn't actually end up long-term hurting the network.
Okay, and just to take this a little bit further, and this is where I also want to talk about staking concentration. What if they tried to make this more of like an international push, and then they started targeting, for example, staking pools as a group?
Absolutely, yeah. So if all nations agreed to try to force this and got aggressive in pursuing validators that didn't produce OFAC compliant transactions, et cetera, that would be a real challenge. That's the sort of kind of coordinated state actor level thing that would be a challenge. What you would end up probably having is a lot of people, like I said, running validators secretly from home in various countries behind VPNs, doing things to kind of mask their IP address, et cetera. It's really, really hard to chase that down in proof of stake because proof of stake validators is so much harder to find than proof of work mining operation. That would be a real challenge, though. You'd probably end up with less participation in the world. You would end up with people getting arrested, and then you'd end up with other people kind of hiding. So it would become a lot more like what you see with like Pirate Bay and things, where you would still have people participating and bearing that legal costs and doing things to protect themselves. And it would be kind of this fight. That sort of thing is one of the that's like a state level attack that would be one of the bigger challenges to a network like this. It would be kind of akin to if they said, hey, all nations are banning proof of work and we're going to chase down and arrest anyone we find running a Bitcoin miner. It would be a similar level risk as that. And then you have kind of the other state level risk where if the US government and others started expending resources to engage in 51% attacks, that's the other way to attack these networks. Expending resources to engage in 51% attacks would be a much bigger risk to proof of work networks than proof of stake, where if the US government spent billions to acquire 51% of all ETH validators and then engaged in a 51% attack, they would get slashed right away and then could not continue attacking. And then they'd have to re-expend those resources. Proof of work, it's a little bit easier. But there would be real challenges there. That would be like one of the biggest challenges that would be the biggest challenge that a decentralized blockchain has ever faced. But I think it'd be unlikely to like truly kill a blockchain. It's too hard to find all of the staking validators.
Politically, I think it's also, I understand that mathematically this is a danger, but politically to tell your citizens, we're going to take your money or we're going to print more money to take over this network and attack it is probably not going to be super popular with most people. I think that's going to be a hard sell. Just thinking about the architecture of Ethereum, where you have a centralized, well, it's a decentralized L1, but there's one L1, and then there are these other L2s operating on top of that L1. It seems to me that that's a very good vector of attack if you are some judicial system of sorts who doesn't, who has an issue with something going on this decentralized platform. To just go after that one L1, you could kind of shut down the whole party if you find a way to do it. Whereas if you take an architecture like Polkadot or Avalanche, my initial thinking on this, and I think we want to think and talk about this longer, but is that it's going to be a little bit harder because as soon as something unpleasant happens, well, you can just start spinning up more, subnets, and you can move everyone over to the new subnets. Any thoughts on that? I don't know if you've considered it, sort of an idea.
So like app chains, Cosmos, Polkadot, Avalanche maybe have better parameters for fighting.
There isn't that one vector of attack, right? Like you could try to attack Ava Labs, but if Ava Labs has decentralized the code and it's immutable and they're not able to change it, well, then it's just out in the open, and you can't, if you attack the C chain, well, I can spin up, or not me personally, but someone can spin up a subnet and say, hey, friends, come to the subnet, and, fork your apps and let's get the liquidity over here. So it seems like it would be easier to sort of like run away from an attacker. Whereas with an L1 like Ethereum, you're stuck defending this chain, and if you fail, that's it.
I personally think the more important risk factors to pay attention to are one, do you have a way to slash bad actors, which makes proof of stake with slashing superior to proof of work. And then the second is just how decentralized are you with respect to how many distinct node operators do you have? And then those node operators, how distinct are they from each other? Do you have geographical decentralization, or are they all in a single country? Do you have decentralization along these other vectors? And that just makes it so that you have more entities you have to chase down if you want to censor. And Ethereum is a few orders of magnitude ahead of everyone else with respect to decentralization at the L1 level. They have far more distinct node operators. They're more geographically dispersed, et cetera. And so I think Ethereum is in the best place of any L1 right now to resist this. And then all the other L1 should be thinking about how do we get there as fast as possible. So Avalanche, for example, should be thinking hard about like how do we get it so that people are running at home Avalanche validators across the world, as many of them as possible, not just by professional entities, et cetera. And that's the factor that I think plays by far the biggest role. Not even number of nodes, but number of nodes run by distinct individuals. Because I could run 5 nodes. What's more important is how many distinct entities do you have running nodes, and how different are those entities? Are some of them businesses and some of them people at home? And are some of them in the U.S. and some of them in Argentina? Those types of being distributed amongst those different factors makes you a lot more robust and able to resist these sorts of things. So I consider Ethereum in by far the best place to resist censorship right now. And then all the other blockchains should be working hard to get there. And admittedly, this type of decentralization takes time. And so part of why Ethereum's in the best place is because it's been around longer than a lot of these others. But there's also a factor of the way you design your blockchain can encourage or discourage at-home validator participation. And Ethereum's designed their proof of stake network in a way that makes it a lot easier for at-home validators to run a validator than, say, Solana, that has really hard hardware constraints and bandwidth constraints, et cetera. So for them to ever get to a point where I'm running one from home seems very low likelihood. So it's parameters too, and time. And Ethereum's been careful on both. I think for all the other L1s, they should be thinking hard about both of those.
On a personal note, I do think a good goal for Avalanche at the moment is to probably drop the minimum requirement for staking as a validator, especially while the price of AVAX is pretty low. I think it would be a really good way to bring in a bunch of people, running up nodes, getting them on the validator network, also on validating subnets, and I think that would be a boon for Avalanche as a network.
Yeah, that would be great. There's things they could do at the L1, and then there's things that you could do culturally, where just encouraging a culture of at-home staking for Avalanche would be great. Where build into the community like an ethos of, hey, you should be running a validator if you can.
I just want to ask you if there's any possibility of, let's say, an entire L2 becoming censored. Is that possible?
For an L2 to become censored? Yes, it is. So you could say, if I have an L2 and I'm running a centralized sequencer, I'm the only one running that sequencer, then if I choose to start censoring the transactions from my sequencer, then those transactions are all going to be censored. Most L2s will allow you to kind of still transact at an L1 level. So if I'm on Arbitrum, I can use the Arbitrum sequencer, or I can transact at L1, so they can't really truly censor me. And then most of them have on the roadmap ways to decentralize the sequencer, which makes it so that no, you couldn't in that way. But they're immature enough that if you have a centralized sequencer and no way to transact at the L1 level, then yes. If you can transact at the L1 level, no. And if you have a decentralized sequencer, no. So those are things to pay attention to with the rollups. The sequencer architecture, can I transact at the L1 level, et cetera. There's other reasons that you want to be allowed to transact at the L1 level. For example, if the sequencer goes down. The first time Solana went down, Arbitrum sequencer went down at the same time, but Arbitrum users could still transact. They just pay more gas, transact basically at the L1 level.
I wanted to ask you about staking concentration, because I've noticed that's something that you are very vocal about. Can you just describe the environment and whatever kind of potential problems that this might present, and also kind of like the current big actors in play?
Yes. So Ethereum staking has a level of concentration that is concerning to many of us, especially in Coinbase and Lido most of all. So you have these staking pools where if I don't want to run my own validator, I can deposit into a pool and they'll run validators on my behalf. And if you have enough people depositing into those pools can become a large part of the network. Lido currently captures more than 30% of the network. Coinbase a little bit less than that, but Coinbase is less decentralized under the hood than Lido. So you could say they add maybe even more to concentration. And this is concerning for a number of reasons. For one, your risk of a 51% attack goes up if there's an entity that starts capturing more and more of that network. So if Lido has a large percentage of the stake, and then the Lido node operators all gather together and decide they want to do a 51% attack, then there's that risk. That I actually consider the smallest risk, the smallest issue here, because if they did do that, then they would get slashed. There's a way to recover from that, relatively straightforward way to recover from 51% attacks. The bigger issues with the concentration, I think, are a fewfold. One, robustness of the network. Say a single entity, a single staking provider that has a liquid staking derivative that you can use in DeFi, captured 90% of the network. And that asset got used all across DeFi. And then either through malicious activity or a mistake, there was a slashing there. It could cause contagion in DeFi, where, okay, that asset suddenly drops in value significantly, and it is a major collateral asset in every DeFi lending protocol. So robustness of the network, I think, is higher if you have more distribution there. And I feel the same way about stablecoins. Having a winner-take-all stablecoin is not a good thing, I think. I think having many stablecoins with a small amount of the network and various trade-offs, et cetera, is better, so that if any one blew up, it doesn't blow up all of DeFi. So that's piece number one. Piece number two that I find concerning is if you have enough concentration and then they choose to be extractive, the things you can do with MEV get worse. So we know, you can extract some level of value out of a block. The amount you can extract if you're proposing multiple blocks in a row increases. So if I have a large amount of the network and I'm frequently proposing 2 blocks back to back, and I choose to engage in multi-block MEV, I end up extracting more out of the network, and I end up, causing this kind of cartelization issue where maybe staking through me is more profitable than staking anywhere else. And so it kind of amplifies that issue. One of the biggest advantages of switching from proof of work to proof of stake is that you essentially removed economies of scale. In proof of work, the biggest miners can be the most profitable because they can get better deals on electricity, warehousing, hardware, et cetera. In proof of stake, generally, a small validator at home versus a huge pool will have the same return on investment. And so you remove those economies of scale. And so you remove this issue that causes like concentration of wealth. Well, you could potentially bring that back once you cross a certain threshold and then start engaging in multi-block MEV. So those are the things that I find concerning. They're not fatal, they're fixable, but there's something that are very, very important to fix. And so as a community, we should be seeking to have lots of at-home validators, and then those that are using staking pools have that very distributed amongst many, so no one of them causes systemic risk to DeFi, for example.
And do they pose any like increased risk towards the censorship problem? If, for example, Coinbase and Lido were more likely than most regular validators to participate in censorship, is that like a realistic issue?
Somewhat, yes. So say, Lido's dominance grew to 99% and they took all of their blocks from Flashbots and Censored, then just that means that 99% of blocks will be excluding tornado transactions. So if you have a bigger, more dominant entity, their choices with respect to whether to censor the blocks they propose or not have a bigger impact. So yes, that's a risk as well.
And do you think it's a problem for these staking services to be accruing so much of people's, staking power? Does it present a bit more of a problem on kind of like the individual side of things, where people are kind of less involved in the staking process and therefore they're less concerned with the outcome and the sort of like the political ramifications of doing it yourself versus just letting someone else do it for you?
I think, yeah, to some extent. I think you're likely more engaged if you are more actively participating. So yeah, that's a good point. And then I think also Lido, it's a bunch of, kind of corporations that are running the validators under the hood. And I think there's value in having individuals and corporations both participating in the network. So I think there's some level of risk there as well. And culturally, you want a situation where you have participation from all types of entities, where individuals don't just say, we're just going to let the corporations run the whole thing and we'll kind of exit and not participate. So yes.
Okay. Last question I have. Based on your experience, where do you see this going in the future? Like compared to where we are right now, how do you see this developing over, let's say, the next couple of years?
I'm pretty optimistic. I think that it'll improve. There's a lot of attention called to it. You'll notice in the Ethereum community, it's very self-critical, which is a good thing. The people that talk about these issues the most are people in the Ethereum community. There are some other blockchain communities that are less able to be as self-critical. So I think that's a good thing. There are roadmap items at the base layer to address the censorship issue. And then there are a lot of things being worked on at various levels to try to reduce the concentration of Ethereum staking. Lots of community-driven initiatives there. So I think the community is taking it very seriously. There's a clear path to fixing many of these things. I expect in 3 years for these things to be less of an issue than they are now.
All right, that's good to hear. One of the main concerns that I have at this point, just watching the market and watching sort of governments are working with these different systems and blockchains, and a lot of governments are looking to potentially roll out their own CBDCs in the near future. I think we've seen a lot of governments, or at least like Western governments, starting to ramp up their control over the money supply and their control over a lot of things. They just want more control. So I think personally, I see a potential for a little bit of a clash between the way that the governments want the finance system to run versus the way that, the sort of decentralized community of people interested in blockchain and crypto, how they want that to run. So that's where my main concern's coming from.
Yeah, definitely. I think there are major kind of large, powerful parties with different goals than most of these blockchain communities, for sure.
I think I would share my view here as well. And the more I look at the crypto ecosystem evolve, it seems to me like my expectation is that Ethereum is going to continue, I'm going to call it winning, um, uh, a lot of what is DeFi. But I expect that Avalanche is going to continue to thrive due to the subnet ecosystem, especially with like corporate entities that need to control their own setting. So it's going to be a chain that's going to continue to do well. And if Ethereum happens to, which is not my expectation, but if it does get captured somehow by a government or an attacker of sorts, um, I do think that there's a risk that it takes down the whole ecosystem, right? It takes down all the L2s that are attached to it. And at that point, I'm sort of happy to know that there are going to be other options, right? So like people who are going to see, if that ever were to happen, I think you would see people say, okay, well, I'm going to spin up my own subnet and I'm going to say, okay, well, I don't want these types of validators and here are the rules to validating on my subnet. And this could happen pretty cheaply, pretty fast. I guess my overall thinking is that whatever happens, I think crypto continues to do well in terms of decentralization, which is core to the mission, right? If we don't have this, there's no point to this really. So yeah, that's my sort of current thinking.
Yeah, definitely. After this conversation, I'm more optimistic about the continued independence and decentralization of Ethereum. And at this point, I already had this belief, but I'm pretty sure we'll probably see Ethereum flip Bitcoin within the next 2 years. This is not investment advice, but it's just my opinion.
I think one great opportunity here as well, just to point out, is that a lot of the issues that Ethereum is facing, both with respect to MEV itself and censorship, are things that the other L1s can learn from as well. So you can say, okay, let's look at what is happening with MEV and Ethereum and how they're fixing it, and let's implement the same fixes in our L1s as well. Let's see what's happening with censorship. Maybe Avalanche implements CR lists. Maybe Avalanche implements PBS. Same with the others, just using them as an example. I think one of the biggest mistakes that an L1 can make, and I've seen this a few times, is for an L1 to say, hey, because we are faster, because we don't have mempool, or because we have faster finality, MEV doesn't exist here. And I think that MEV, you theoretically cannot get rid of it. MEV exists under a different name in traditional markets, even though they're super fast, and you end up with these flash boys that are basically engaging in MEV. It takes a little bit of a different form, and so I think it's probably good for all of the blockchains to just observe and learn from each other, and should be observing and learning from Ethereum here. Okay, MEV is something we want to mitigate as well. Censorship is something we want to mitigate as well. So let's look at like CR lists, or see if we want to implement something else. Let's look at what PBS would look like in our L1. Let's look at other MEV mitigants, etc.
Absolutely. And even if they're not implemented right away, I think the roadmap is sort of clear, right? So as soon as there is something happening, you already have a solution up your sleeve. Thanks to Ethereum.
That's for that reason. I think having many L1s at this stage is really good, because you have people, some experimenting on the Solana side of like, what does really big fast blocks look like, and what does it look like if you have this subnet architecture or app chains from Cosmos or Polkadot? What does it look like? Ethereum's approach, and hopefully each of them can learn from each other and all can improve.
Yeah, I think it's great. Competition kind of promotes ingenuity.
But it lowers risk because it lowers centralization. You're not reliant on one architecture, right? Which I think is my current sort of insight, which I did not have initially. Initially, I thought when I got into crypto that having all these different architectures was, good for competition and evolution in general, but sort of negative from a client perspective, because it fragments the whole ecosystem, right? But now I sort of, after watching what has been happening on Ethereum, I'm happy that we have a diverse ecosystem. So if one part of the ecosystem doesn't perform well, it's not the end.
Well, I think that's a pretty good place to call it quits here. It's been a very interesting conversation. For the people watching, leave a comment. Tell us what you think about it. Like it, share it. Follow us.
Please
on
follow
Twitter.
Jared on Twitter, because he has like 10 followers. So
yeah, I need some
we'd
followers.
like to get him a couple more.
What's your Twitter handles?
He doesn't know it by heart.
No.
Okay, I just thank you, Rhett. This was really this was a great one.
Yeah,
Really
thanks for
liked
coming
this
on.
one.
Very, very welcome. Yeah.
Yeah.
All right, thanks everyone for watching, and we'll see you next time.